Based on the historical data and forecast, Bitcoin has shown volatility, with support at $103,900 and resistance at $109,300. The RSI has fluctuated between 50.3 and 78.1, indicating periods of both overbought and oversold conditions. The Bollinger Bands have widened and narrowed, suggesting changing volatility levels. Considering the recent RSI reading of 53.9 and the forecast prices hovering around $106,000 to $106,700, a moderately bullish strategy is warranted. We will implement a three-pronged approach combining RSI, Bollinger Bands, and support/resistance levels to maximize potential returns while managing risk. The primary strategy will be a combined RSI and Bollinger Bands approach. When the RSI dips below 30, indicating an oversold condition, we will enter a long position at $107,200. The stop loss will be set just below the lower Bollinger Band at $102,000 to protect against unexpected downside. The initial target price will be the upper Bollinger Band at $111,100. If the price reaches this target, we will reevaluate and potentially set a new target closer to the resistance level of $109,300. A secondary strategy will be to enter a long position when the price bounces off the support level of $103,900, with a stop loss at $103,000 and a target price of $106,000. The portfolio will weight the combined RSI and Bollinger Band strategy at 70% and the support level strategy at 30% to prioritize the more dynamic and potentially higher return approach. Based on the historical data and forecast, Ethereum exhibits an overall upward trend, supported by consistently breaching the 2600 level and the forecast projecting further gains. The RSI consistently fluctuates above 50, indicating bullish momentum, with values occasionally approaching the overbought territory of 80. The Bollinger Bands show that the price is generally trading within the bands, suggesting moderate volatility. Considering these factors, I recommend a long position strategy. We will enter a long position at $2,680. Given the support level at $2,520, we will set a stop-loss order at $2,550 to mitigate potential losses. The initial target price will be $2,730, aligning with the forecast for June 10, 2025. To refine the strategy, we can incorporate RSI signals. If the RSI dips below 20, signaling an oversold condition, we could consider accumulating more Ethereum at a lower price. Conversely, if the RSI exceeds 80, indicating an overbought condition, we might consider taking partial profits or tightening our stop loss. The Bollinger Bands can also guide our decisions. If the price touches the lower band, it may be a good time to enter a long position. If the price touches the upper band, we can consider taking profits. The most efficient portfolio will be a combination of these three strategies, with a focus on the long position at $2,680, a stop loss at $2,550, and a target price of $2,730. Based on the historical data and forecast, XRP shows a slight downward trend with periods of consolidation. The RSI consistently fluctuates, dipping below 40 on several occasions, indicating oversold conditions. The Bollinger Bands suggest that the price is currently near the lower band, hinting at a potential bounce. Considering the support level at $2.14 and the forecast predicting prices around $2.26 to $2.31, a strategy focused on capitalizing on short-term rebounds is advisable. Therefore, I recommend a portfolio with a combined strategy. The primary strategy is a long position entry at $2.26 with a stop loss at $2.14, just below the support level, to limit potential losses. The initial target price is $2.31, aligning with the forecast for June 10, 2025. If the price reaches $2.31, we will adjust the stop loss to the entry price of $2.26 to protect profits. If the price continues to rise, we will set a second target price at $2.42, the resistance level, and implement a trailing stop-loss strategy to maximize gains. This approach leverages the RSI's oversold signals and Bollinger Band's potential for a bounce, while incorporating support and resistance levels for risk management and profit optimization. Based on the historical data and forecast, BNB shows a slight upward trend, consistently trading within the Bollinger Bands. The RSI fluctuates but generally remains above 50, indicating a moderately bullish momentum. The support price has been consistently at $655, while the resistance has been around $664. Considering these factors, I propose a moderately bullish strategy with an initial entry at $661. A stop-loss order should be placed at $655 to mitigate potential losses if the price breaks down through the support level. The initial target price will be $668, aiming to capture a short-term upward movement. To refine this strategy, I'll incorporate the RSI and Bollinger Band signals. When the RSI dips below 50 and the price touches the lower Bollinger Band, it signals a potential buying opportunity. Conversely, when the RSI reaches above 80 and the price touches the upper Bollinger Band, it suggests a potential selling opportunity. If the price breaks below $655, the strategy will automatically exit the position. If the price hits $668, the position will be closed for a profit. This approach combines trend analysis, support and resistance levels, and technical indicators to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Solana exhibits a downtrend, with a recent dip below the Bollinger Band's lower band and an RSI consistently below 50, indicating a weakening momentum. The forecast for the next week suggests continued downward pressure, with prices hovering around $155 to $161. Therefore, I recommend a short position strategy. We will enter a short position at $161. The stop loss should be set at $165, just above the center of the Bollinger Bands, to mitigate potential upward spikes. The initial target price is $156, aligning with the recent support level and the forecast price. To refine this strategy, we can implement a trailing stop loss. If the price rises to $163, we will adjust the stop loss to $163. If the price continues to rise to $165, we will adjust the stop loss to $165. The second target price is $155. This approach balances risk management with the potential for increased profits as the downtrend continues. This portfolio combines technical indicators and price action analysis for a high-probability trading opportunity. Based on the historical data and forecast, Dogecoin exhibits a downtrend with increasing volatility. The RSI consistently hovers below 60, indicating a weak bullish momentum and suggesting potential oversold conditions. The Bollinger Bands are widening, confirming the increasing volatility. Considering these factors, I propose a contrarian strategy focusing on short-term pullbacks. We will initiate a long position at $0.194, coinciding with a recent low and an oversold RSI reading of 40.2. A stop loss will be placed just below the support level at $0.182 to mitigate potential losses if the downtrend continues. The initial target price will be set at $0.221, aligning with the recent resistance level. To refine the strategy, we'll incorporate the Bollinger Bands. If the price touches the lower band, it could indicate an oversold condition, reinforcing the long entry. If the price approaches the upper band, it may signal a potential short-term reversal. We will adjust the target price to $0.235 if the price closes above the upper Bollinger Band. This combined RSI and Bollinger Bands approach provides a more dynamic and adaptive strategy. The portfolio will prioritize this short-term contrarian approach, balancing risk and potential reward within the volatile Dogecoin market. Based on the historical data and forecast, TRON shows a slight upward trend with price fluctuations within the 0.266 to 0.275 range. The RSI consistently stays between 49.5 and 66.7, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been narrowing recently, suggesting a period of consolidation. Considering this, a moderately bullish strategy is recommended. We will implement a strategy based on the RSI, Bollinger Bands, and support/resistance levels. The entry price will be $0.271, coinciding with a slight pullback from the recent high and staying above the support level. The stop loss will be set at $0.266, just below the support price, to protect against a potential downward reversal. The initial target price is $0.275, the resistance level. To enhance the strategy, we will incorporate the Bollinger Bands. If the price touches the lower band, it signals a potential buying opportunity, but given the current RSI levels, we will stick to the initial entry. If the price reaches the upper band, we will consider taking partial profits and adjusting the stop loss to protect gains. The forecast suggests prices will remain around 0.272 to 0.275, supporting the bullish outlook. Therefore, the final portfolio will be a moderately bullish strategy with an entry price of $0.271, a stop loss at $0.266, and a target price of $0.275, with adjustments based on Bollinger Band movements. This strategy aims to capitalize on the current upward trend while mitigating risk through defined stop-loss levels. Based on the historical data and forecast, Cardano has shown a downtrend over the past 2 weeks, with the RSI consistently below 80 and often dipping below 50, indicating weakening momentum. The forecast for the next week projects a continuation of this downtrend, with prices fluctuating around $0.707 to $0.681. Considering the support price of $0.659, I recommend a short position strategy. The entry price will be $0.707. The stop loss will be set at $0.714, just above the recent bottom of the Bollinger Bands, to limit potential losses if the price unexpectedly reverses. The target price will be $0.659, aligning with the established support level, aiming for a profit of $0.048. To refine this strategy, we'll incorporate the RSI and Bollinger Bands. If the RSI drops below 40, which has occurred several times in the recent past, it suggests an oversold condition, presenting a potential opportunity to cover the short position or even consider a long position. Conversely, if the price touches the bottom of the Bollinger Bands, it may signal a potential bounce, prompting a reassessment of the short position. Therefore, the portfolio will be a short position with an entry price of $0.707, a stop-loss price of $0.714, and a target price of $0.659, with adjustments based on RSI and Bollinger Bands signals. Based on the historical data and forecast, Sui shows a downtrend with increasing volatility. The price has been fluctuating between a support of $3.19 and a resistance of $3.53. The RSI indicates oversold conditions recently, hovering around 37.5 to 43.4, suggesting a potential bounce. However, the forecast predicts a continued downtrend, with prices ranging from $3.44 to $3.25. Considering these factors, I recommend a short-term contrarian strategy. We will initiate a long position at $3.25, placing a stop-loss at $3.19, just below the established support level. The target price will be set at $3.34, aligning with the recent resistance level. This strategy aims to capitalize on a potential short-term bounce while limiting losses if the downtrend continues. To refine this strategy, we will incorporate the Bollinger Bands. When the price touches the lower band, it indicates an oversold condition, supporting our entry point. The center of the Bollinger Bands has been declining, further confirming the downtrend. If the price breaks below $3.25, it signals a stronger bearish momentum, and we should close the position immediately. Conversely, if the price reaches the upper band of $4.17, it indicates an overbought condition, and we should consider taking profits early. This combined approach, utilizing RSI and Bollinger Bands, provides a more robust and adaptable strategy for navigating the current market conditions. Based on the historical data and forecast, Chainlink has shown a downtrend from May 21 to June 3, 2025, with the price fluctuating between the support of $13.9 and the resistance of $15.3. The RSI indicates oversold conditions on several days, particularly around 37.9 on May 30, 2025, suggesting a potential bounce. The Bollinger Bands show the price consistently approaching the lower band, indicating increased volatility and potential for a rebound. The forecast for the next week predicts a stable price around $14.3, which supports a cautious bullish strategy. Therefore, I recommend a long position entry at $14.2 plus $0, placing a stop-loss order at $13.9 plus $0 to protect against further downside risk. A reasonable target price would be $14.7 plus $0, aiming to capitalize on the predicted price stabilization. To refine this strategy, we will incorporate the RSI and Bollinger Band signals. If the RSI falls below 20, it signals a strong oversold condition, triggering a long entry. Conversely, if the RSI exceeds 80, it indicates an overbought condition, suggesting a potential short entry. Furthermore, if the price touches the lower Bollinger Band, it suggests a potential buying opportunity, while touching the upper band indicates a potential selling opportunity. Combining these signals, I suggest a long entry at $14.2 plus $0, with a stop-loss at $13.9 plus $0 and a target price of $14.7 plus $0. This strategy aims to capture the predicted price stabilization while mitigating risk through a well-defined stop-loss. Based on the historical data and forecast, Internet Computer shows a slight upward trend with volatility. The RSI consistently fluctuates around 50, indicating a neutral market condition. However, the recent dip below the support level of $5.2 warrants a cautious yet opportunistic approach. Considering the forecast for the next week, with prices hovering around $5.3 to $5.6, I recommend a long position strategy. We will enter a long position at $5.33. Given the support level at $5.2, we will set a stop-loss at $5.19 to limit potential losses. The resistance level of $5.7 will serve as our target price, aiming for a potential gain of $0.34. To refine this strategy, we'll incorporate Bollinger Bands. If the price touches the lower band, which has been consistently around $4.8 to $5.0, it signals an oversold condition, reinforcing our entry point. Conversely, if the price reaches the upper band, around $5.8 to $6.0, it suggests an overbought condition, prompting us to consider taking profits early. Therefore, we will adjust our target price to $5.61 if the price reaches the upper Bollinger Band. This combined strategy, utilizing both RSI and Bollinger Bands, offers a balanced approach to capitalize on the slight upward trend while mitigating risk through strategic stop-loss and target price adjustments. Based on the historical data and forecast, Aave demonstrates a clear upward trend. The price has consistently tested the support level of $246 and has been approaching the resistance level of $305. The RSI values, while fluctuating, generally remain above 50, indicating bullish momentum. The Bollinger Bands also support this view, with the price consistently trading near the upper band, suggesting strong buying pressure. Therefore, my recommended strategy is to implement a long position targeting the resistance level. Specifically, I suggest entering a long position at $268, placing a stop-loss order at $257 to mitigate potential losses if the price reverses, and setting a target price of $291 to capitalize on the anticipated upward movement. To refine this strategy, I will incorporate RSI signals. If the RSI dips below 20, it indicates an oversold condition, signaling a potential buying opportunity. Conversely, an RSI above 80 suggests an overbought condition, prompting a consideration for taking profits or reducing exposure. Considering the forecast data, the price is expected to rise to $291. I recommend maintaining the long position until the target price of $291 is reached or the RSI reaches 80, at which point a partial profit-taking strategy should be considered. This combined approach, leveraging both Bollinger Bands and RSI, aims to maximize returns while managing risk effectively. Based on the historical data and forecast, Stacks has been exhibiting a downtrend, with recent prices fluctuating below the Bollinger Band center and RSI values consistently below 60. The forecast for the next week suggests continued sideways movement around $0.823 to $0.831, with limited upward potential. Considering the support price of $0.742, a conservative strategy is to initiate a long position when the RSI reaches an oversold level of 20, which has not been reached recently. However, if the price dips to $0.742, we will enter a long position at $0.742, set a stop loss at $0.724, and target a price of $0.803, capitalizing on the potential for a bounce from the support level. To refine the strategy, we'll incorporate Bollinger Bands. If the price falls below the lower band, indicating an oversold condition, we'll enter a long position at the lower band price. For instance, if the price touches $0.717, we will enter a long position at $0.717, set a stop loss at $0.70, and target a price of $0.785. This strategy combines RSI and Bollinger Bands to identify optimal entry points and manage risk effectively. The final portfolio will prioritize the Bollinger Bands strategy due to its more responsive nature to recent price movements and the relatively stable forecast, aiming for a balance between capitalizing on potential rebounds and limiting downside risk. Based on the historical data and forecast, Jito has shown significant volatility. The RSI consistently dipped below 50, reaching a low of 33.5 on May 30, 2025, indicating an oversold condition. The forecast suggests a gradual upward trend, with prices moving from $1.85 to $1.95 over the next week. The Bollinger Bands also support this, as the price has been approaching the lower band, suggesting a potential bounce. Therefore, I recommend a long position with an entry price of $1.85. Place a stop-loss order at $1.58, just below the established support level, to mitigate potential losses. Set a target price of $1.95, aligning with the forecast high for the week and the upper Bollinger Band. To maximize returns, I suggest a portfolio strategy that combines the RSI, Bollinger Bands, and support/resistance levels. Enter a long position at $1.85. If the price breaks below $1.58, immediately exit the position to limit losses. If the price reaches $1.95, take profit. This strategy prioritizes capitalizing on the anticipated upward trend while incorporating risk management through stop-loss orders and profit targets. This approach balances potential gains with controlled risk, suitable for a high-returns investment strategy. Based on the historical data and forecast, movement shows a downtrend with considerable volatility. The RSI consistently remains below 50, indicating a bearish sentiment. The recent dip below the support price of $0.14 suggests further downside potential. Considering the forecast for the next week, the price is expected to hover around $0.151 to $0.152, which is near the lower Bollinger Band. Therefore, I recommend a short position. Entry price should be $0.151. The stop loss should be set just above the upper Bollinger Band at $0.16 to limit potential losses if the price unexpectedly reverses. The target price should be the support level of $0.14, aiming for a profit of $0.011. To refine this strategy, we can incorporate RSI signals. If the RSI drops below 20, indicating an oversold condition, we can consider covering the short position or moving the stop-loss lower. Conversely, if the RSI approaches 80, suggesting an overbought condition, we should consider closing the short position and potentially looking for a long entry. This combined strategy, utilizing both Bollinger Bands and RSI, offers a balanced approach to manage risk and maximize potential returns in the volatile movement market. The portfolio should prioritize risk management with a clear stop-loss and target price. Based on the historical data and forecast, Ethena has shown considerable volatility over the past 2 weeks, with a recent dip and subsequent stabilization. The support price consistently remains at $0.322, while the resistance fluctuates around $0.368. The RSI has recently moved below 50, indicating a potential oversold condition, with a low of 39.5. The forecast for the next week suggests a slight downward trend initially, before potentially rebounding towards $0.378. Considering these factors, I propose a long position strategy focusing on the recent oversold conditions. The entry price for this strategy should be $0.364, capitalizing on the anticipated bounce from the recent low and the potential for a move towards the resistance level. The stop loss should be set at $0.322, coinciding with the established support price, to limit potential losses. The target price for this trade should be $0.38, aligning with the recent resistance level and offering a reasonable profit margin. This strategy combines RSI oversold signals with Bollinger Bands and support/resistance levels for a balanced approach. The portfolio will be 60% based on the RSI strategy, 30% based on the Bollinger Band strategy, and 10% based on the support and resistance strategy. Based on the historical data and forecast, Artificial Superintelligence Alliance shows a mixed trend with periods of both upward and downward movement. The RSI fluctuating between 45.2 and 64.4 suggests periods of both oversold and overbought conditions. The Bollinger Bands indicate volatility, with the price frequently touching or crossing the upper and lower bands. Considering the forecast for June 4 to June 10, 2025, with prices ranging from $0.87 to $0.929, I recommend a moderately bullish strategy. We will initiate a long position at $0.87, placing a stop-loss order at $0.746, which aligns with the established support level. The target price will be set at $0.929, reflecting the highest forecasted price within the week. To refine this strategy, we will incorporate RSI and Bollinger Band signals. If the RSI falls below 20, we will consider a long entry. If the RSI exceeds 80, we will consider a short entry. When the price touches the lower Bollinger Band, we will consider a long entry, and when the price touches the upper Bollinger Band, we will consider a short entry. Combining these signals, I suggest a portfolio with 60% long position, 30% short position, and 10% holding position. The long position entry price is $0.87, stop loss is $0.746, and target price is $0.929. The short position entry price is $0.898, stop loss is $0.929, and target price is $0.872. This blended approach aims to capitalize on both upward and downward price movements while mitigating risk through strategically placed stop-loss orders. Based on the historical data and forecast, Quant demonstrates a strong upward trend, consistently challenging and surpassing the resistance level of $127. The RSI values have been fluctuating, but generally trending upwards, indicating increasing bullish momentum. The Bollinger Bands have been widening, suggesting increased volatility and potential for further price movement. Considering these factors, I recommend a long position strategy with a focus on capitalizing on the anticipated upward trajectory. The entry price will be $116, aligning with the beginning of the forecast period. A stop loss will be set at $113, just below the recent price action and support level, to mitigate potential losses. The initial target price will be $124, based on the forecast high, with a secondary target of $127, the previous resistance level, to capture further gains. To refine this strategy, I'll incorporate RSI and Bollinger Band signals. When the RSI dips below 20, indicating an oversold condition, we'll consider a long entry. Conversely, when the RSI exceeds 80, suggesting an overbought state, we'll consider taking profits or tightening stop loss. If the price touches the lower Bollinger Band, it signals a potential buying opportunity, while a touch of the upper band suggests a potential selling point. Combining these indicators with the overall trend, our portfolio will prioritize long positions with a defined risk-reward ratio. Specifically, we'll enter long at $116, set a stop loss at $113, and aim for a target price of $124. This strategy balances trend following with technical signals for optimal risk management and high returns. Based on the historical data and forecast, Maker exhibits a clear upward trend. The price has been consistently making higher highs and higher lows, and the forecast suggests continued upward momentum, reaching $2,040. The support level at $1,790 has held firm, and the resistance at $2,110 presents a potential target. Considering the RSI readings, the asset has recently moved from oversold to overbought territory, indicating strengthening bullish sentiment. The Bollinger Bands show that the price has been fluctuating within a widening range, suggesting increased volatility and potential for significant price movements. Therefore, I recommend a long position with an entry price of $1,800. Given the upward trend and forecast, the initial stop loss should be placed slightly below the support level at $1,790, setting it at $1,770 to mitigate potential downside risk. The first target price should be aligned with the resistance level at $2,110, aiming for a substantial profit. To capitalize on the momentum, a second target price can be set at $2,040 based on the forecast. This strategy combines trend analysis, support and resistance levels, RSI signals, and Bollinger Bands to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Compound shows a slight upward trend. The RSI consistently fluctuates around the 50 mark, indicating neither strong overbought nor oversold conditions. However, the recent dip in RSI towards 40 suggests a potential temporary oversold situation. Combining this with the forecast data, which predicts prices around $43 to $45, I recommend a long position strategy. Specifically, enter a long position at $43. Set a stop loss at $39.7, just below the bottom of the Bollinger Bands to protect against unexpected downturns. A reasonable target price would be $48.4, aligning with the resistance level. To refine this strategy, I'll incorporate the Bollinger Bands. If the price touches the bottom band around $39.7, it strengthens the stop-loss signal. Conversely, if the price breaks above the upper band around $49, it suggests a potential trend reversal and could be considered as a partial profit-taking opportunity. This combined strategy aims to capitalize on the slight upward trend while managing risk through stop-loss orders and utilizing Bollinger Bands for confirmation. The final portfolio will be a long position at $43 with a stop loss at $39.7 and a target price of $48.4.